Morning, everybody. Hope everybody is well. Thursday, the 19th of March. Obviously, we've had a tougher week this week. Hopefully, things are going to start to turn around. Now, managed to obviously stop the run yesterday. However, yeah, we well to be honest, actually, if we're in potentially a different kind of mindset, I think what happens when you have a couple of bad days, you end up protecting. Now, we actually got in at Euro here. It would have hit TP yesterday. Aussie would have hit TPP. We would have been very, very, very happy. But obviously, leading into the news, and I think this is where it's important to obviously explain the psychology before we get started. Leading into the news yesterday, if we'd have smashed it Monday, Tuesday, we would have been happy to obviously let them, run because we can obviously take on a bit more risk. But it's about reducing risk off the table when obviously times like weeks like we've had, which we'll always have. Weeks like this will always happen, and it's times like this where we've just got to rewind slightly, and obviously make sure we're on the right side of risk. One thing that we've also got to always look at is, and I think weeks like this really sum it up for me in particular, because if you look at, say, for example, right, we've had two losing days here, and that they've been heavy, but obviously, what you've got to always look at with trading is the long-term picture. And I think, one thing that I used to get in a habit of, and it kind of reminds me, you look at the FX markets as like an instant source of something to get money out of. All right, like instantly though. You don't look at it as as a hedge fund does, an institution does, a long term growth growth formulation. So that's one thing that we've got to remember is and it's especially in times where obviously markets are particularly tricky. You might be like, right, you know what, I've lost 1K, so I'm going to get it back in the next hour, and then you're going to go enter, blow more. All right, this is a common habit, but obviously, rather than thinking, right, you know what, it's going to take me a few days to get this back, but I'm going to get it back. And I know that longevity wise, I am on it. And also, you've got to look at it in regards to if two, very, very bad days have blown your account or blown half of your account, you've got to look into your risk slightly, you know or look into your process, slightly, in regards to, right, am I letting my losers run too hard? I know the trade's, technically still valid, but obviously remember a trade is just, what obviously, we draw on, the invalidation is the ultimate stop loss. Yes. But obviously it doesn't mean you have to let it run up to that, stop loss. All right. If you're having that kind of feeling, a bit like I did on Tuesday, where it's like, you know what, I don't want to lose more. It's running in the wrong direction. I'm going to close. All right. You've got to have that ultimate stop loss so that if you have two bad days, it's not going to catch you out. All right. So that's obviously one thing to have a think about. Feel free to, message me about it, speak to me about it. It's no problem at all. You guys obviously know what my at is, and obviously I'll be trying to. I've got a bit of time today. I've got my car having like a major valet and a ceramic coat. So yeah, I'm here, locked in all day. So I'm going to try and reach out to all of you as well in the chat, to obviously to see how you're getting on. But yeah, so right. let's get down to business now. All right, let's get down to business. So today, what has happened? We've got a very, very busy day. So we've had obviously unemployment rate for Aussie is up. All right, not great. Employment change has increased, but obviously the unemployment rate has got a bit out of control here. No surprises here. Bank of Japan held. I haven't looked into the Japanese press conference yet, so that's one thing that I'm going to look into. UK employment rate, I wouldn't say this here, should be black because it was 5.2. That they were predicting it to be 5.3. It's actually stayed at 5.2. Employment changes there. Earnings is down, and obviously claimant count is up. So very, 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 very kind of mixed data for me in that, that kind of respect. But obviously, it's going to be leading into this. I actually think there's going to be a lot of unchanged votes here. I think they're obviously going to hold interest rates. I think it's going to be strong. I think they have to. I don't think they can reduce them. So yeah, let's wait and see. Part of me wonders if the UK might increase interest rates. So I've got a very, very good friend of mine. He's quite high up in the mortgage um, industry, and he was rushing to to sort his mortgage out this week on his own house because he was telling me, I'm not sure where he's had some insider information that obviously mortgage rates are going to start to rise and blah blah blah. So interesting to see if that's got anything to do with it. But my overall outlook would be that they're going to stick to 3.75%. I think if they were going to raise, they would have. That would be projected. We then got some jobs data. It's supposed to, not come out great. Manufacturing is, for everyone across the board. It's more expensive. So obviously, naturally, that's going to come in a bit higher. And then obviously, we've got interest rate decision as well for euro. So they are due to obviously keep interest rates as they are. But obviously, let's wait and see, what happens here. So very, very busy day today. But the good news is, after today, it pretty much cools down a bit. We've got a bit of time to process. It'll be, nice, and yeah, should be getting back to normal, which is one thing that I'm looking forward to, if I'm honest with you. So what's happening today? What happened yesterday? We obviously had the US interest rate decision. Typical. As I explained, Jerome Powell. Yeah, didn't change interest rates. He's unsure. Blah 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 blah. Everyone expected it, so that's why there was no crazy, moves in the market last night. It was just a continuation. So we obviously got the dollar. I do think there is nothing stopping it hitting this 100 500. So let's wait and see. We had a bit of a scare earlier. Why is that? Yields are flying. They are absolutely flying, and obviously that is what's going to take gold, down and down and down. It's just yields which are the driver here. So we obviously after yesterday we can't look to sell the dollar. All right, we've got to go with trend. We've got to go with overall, macro outlook. I know that's caught us out a couple of times this week, but I'm going with what's obviously given us success since June. So yeah. Right, let's go through some of the pairs. Starting off a pound. I had this laid out this morning. I might edit it, slightly after the call, but obviously, yes, I'm looking into, you know, um, I was looking into this Asian high area being tapped into, and yeah, that's one thing that I am, looking into. Um, Then we've got euro. So euro USD, same thing. When I wanted it to obviously tap in, and obviously this is where us entering later on, is kind of hurts us a bit because this would have tapped, and then it would have been on its way. And so as markets are starting to get back to normal, I might go back to obviously old times. So yeah, Aussie, same thing. I actually think Aussie's got a lot of movement to the downside here. I think it's been strong, but I do think it's got, should come in and test these lows here. Gold, yeah, I mean, I think gold is, if I'm honest, in a bit of no man's land today. Yeah, I think we've got two areas we've got to have a look at here. One would be here, and then next one would be this one here, right? Which would be, yearly lows again. And so, yeah. USDJPY, same thing. I was looking into this. This is obviously Asia. Or Asia low was a little bit higher, but obviously yeah, still obviously looking into this pushing a bit higher. Like we obviously said, we've obviously got oil, and we've got yields here too. They're going to continue. So obviously those two, coupled up with a strong the dollar, should be pretty good. In regards to yeah, what's happening in. So I'm gonna. This is obviously, we've got two scenarios here of entering a bit later. We've obviously got one that we can obviously adjust USDJPY, make sure it's a better entry. But then we've got two where we've kind of missed out on these runs here, and obviously that's the pros and cons of entering a bit later or a bit earlier. Right, let's go through the chats. Have a look here. David, David, you actually messaged me yesterday saying that you'd lost confidence, and obviously that's what sparked my view of looking at over the long term, and obviously how we've been doing. Obviously don't judge after a couple of days. And so, Dave, when your account is small, mine is 1100, nearly half this week. It's difficult to close in drawdown. Feels small account doesn't give much room. You'd be out of most trades. Obviously, at a loss, I've reduced lot size to try and help, but I still feel I want to give it a chance to let it breathe. Yeah, you've just look. I always, say to everyone, you've got to be aiming. If I was being honest, and no one likes to hear it, if you are making to 10% a month for 12 months, you're smashing it. All right. But anyone with an account under probably 20 grand would not be happy with 10%. All right. You want 20%, 30%, 40%. All right. So if I told you 1100, all you got to make every month is 110 quid. All right. And if my maths isn't great, but I would say to make 110 quid, that's like, six quid a day, roughly. All right. You're going to tell me that that is a waste of time, is easy, blah, blah, blah. But that's how you're, supposed to trade. All right. I'm, realistically here. So, if you've obviously lost, 50% over your 2 days trading, you're clearly risking way too much, because when we haven't done anything different, we've not changed anything. Everything's stuck to, the same. All right. So, yes, having two heavy days, heavy, losses, is tough. And yes, this week has been really hard. Don't let me take that away from anyone. It's been the hardest week of the year, probably even including last year. But we're always gonna have weeks like this. It doesn't matter what strategy you have. And obviously, this is the beauty of trading as a human as opposed to trading as a bot because we can adjust. All right. Yes, we've had a really bad Monday to Tuesday, but we can adjust Wednesday and Thursday, Friday until everything's looking right again. And then we switch it back. Wham, we're off. All right. Whereas if you're a bot, you're just carrying on, boom, 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 because markets are constantly changing, exactly like I explained, this morning. Exactly like we explained this morning is you know, is oh, um, is just yeah, yeah, exactly like we explained. If we'd have obviously entered like we normally do early, then obviously we would have capitalized. But obviously I've wanted to take a bit more of a break, set back so that we can obviously let London breathe, and then obviously can hopefully capitalize on it, which is obviously what we did yesterday, and we did it very very well. Although we obviously didn't hold for too long. It's yeah, we did we obviously managed to get out of the rut. So yeah, but right, I'm gonna end it here because I am going to yeah, go through everything, tweak it slightly, and obviously then we can smash it out. So yeah, we're gonna have a good day today, and yeah, we're gonna try and obviously get back some of Monday and Tuesday. We had a nice obviously change of rut yesterday, and obviously now Thursday, Friday is about smashing it. And so yeah, let's go team. Have a great Thursday. The sun is shining, and yeah, let's smash it.